Babcock and Brown shares are still bleeding from yesterday's biggest slide. The stock is down more than 5% in the morning session. Investors are still not convinced the management shakeup that they've seen will save the company from going under. Our next guest's team was the first to put a sell call on the stock last November. Tim Morris is equities analyst at ysell.com, and he joins us now in Sydney. So, Tim, did you see these management changes coming when you bailed out of the stock late last year?
We saw it as a very complex business model with severe macroeconomic headwinds on the horizon. And the fact that it was trading at a PE premium to the market with the cost of debt rising on which it was so reliant, we saw it was ripe for a sell down, and we took the opportunity to cash our clients out accordingly.
So this is not just for technical reasons, but because of its business model. That's the bigger problem that Babcock and Brown is facing now.
Well, the business model is effectively dead for all these kinds of companies around the world.
Dead. So what does that mean for the other infrastructure models out there, like Macquarie, which pioneered in this kind of a venture?
It means they're going to either have to privatize their listed satellites, or they're going to have to pursue other business ventures. Macquarie we see as a more diversified business, although the downside risks to earnings are present as well. Only around a third of Macquarie's revenues we see as coming from these Babcock-style asset flipping strategies. So we see it as a less risky proposition.
How much riskier is it when you talk about Babcock and Brown's various funds as a result of the shakeup? They've got Babcock Power, Babcock Infrastructure, just to name a few.
Look, the listed satellites were never run in the interests of shareholders. They were run in the interest of the parent company, and that's why they've underperformed the entire time. And for this reason, investors aren't going to be interested in putting their cash into these assets anytime in the future.
So I guess that's the reason why the appointment of a new CEO didn't do the trick. I mean, Babcock shares had the biggest slide on Thursday.
Well, it's not a sign of confidence when the person who pioneered the model has been forced to step down. If anything, we view it as more of a political necessity to appease shareholders. However, shareholders should be a little happier that he hasn't stepped down completely, that Phil Green and Jim Babcock are going to remain on the board. If the company is to trade its way out of trouble, we see it as necessary that these pioneers are going to remain in place who know this complex business model back to front.
Yeah, but if that didn't work in the markets and investors sold off Babcock and Brown shares, I mean, wouldn't that have been better off appointing an external CEO to restore investor confidence?
Well, an external CEO would have only been necessary if the company is to pursue completely alternate revenue streams. The company is going to try and trade its way out of trouble. Whether this occurs is going to be a challenge. We're avoiding the stock for now. We see the near-term risk is very high, and its future remains very uncertain.
But if they pursue alternative revenue streams, what are the chances that they could actually stay afloat? Is that the better option?
Possibly is. These guys are the most creative guys on the market. They've pioneered the model. I'm sure they have some extra cards up their sleeve. But in terms of this existing model, they've really built their house on a sandy foundation that is debt. And now that the weather has turned, while they enjoyed the sun while it lasted, there's not a lot they can do but watch their house sink into the water.
So if they do pursue these alternative revenue streams, will they have to get a new CEO, somebody external and not from the inside?
Well, they have put the measures in place. However, we see Phil Green and Jim Babcock playing an integral role. These businesses are built on people. People are the real assets behind the business. And they're the one with the relationships. They're the ones driving the deal-making opportunities. So without them, their business is pretty much worthless.
Are you ever going to be pulling up the sell rating, or do you think it's going to stick for the rest of the year, maybe even next?
We're always open to changing our views on the stock. If it was to reach levels that implied fire sale prices, we could possibly change that. However, right now, dramatic uncertainty remains around the stock, and we're avoiding it in the near term. And while there is a strong theme of asset price deflation engulfing the market, we can't see that changing.
Well, can you really tell what is a fire sale price when it comes to Babcock and Brown, given the uncertainty that you mentioned?
It's hard to tell. The sale prices we've witnessed so far, for example, Babcock and Brown Power selling their Tamar power stations, have been below expectations. And there are a lot of companies like this who are looking to offload assets. Capital is scarce at the moment and buyers are weak. So there is only one way for prices to go in our view.
This infrastructure model, do you think it's going to be flawed forever? Or if the global credit crunch ends, is it going to work again?
It will come back in some form or another. However, investor confidence in the model will remain dented for a long time to come. It possibly has to be in an unlisted form, with the key investors with having a very long-term focus, whether they be superannuation or pension funds, whose interests will be aligned in the assets' cash flows.
Okay, well, it's good to talk to you. Thanks for that, Tim. Tim Morris of flysell.com in Sydney.